Oh man, so just weeks into 2023, crypto gets ready to claim its first major victim. We left 2022 in the rearview mirror thinking, okay, we had Three Arrows Capital, we had Celsius, we had Terra Luna, we had FTX in November. Surely that is it. But now we're getting set to claim the next victim, which is Genesis. Now, this won't come as a surprise to many, right? We knew ever since the FTX collapse, Genesis, which is the parent company of Grayscale, of CoinDesk, of Genesis, have been in troubles, right? And their balance sheet just does not match up. And we're starting to hear that they're getting closer and closer, potentially even this week, to officially filing bankruptcy. And this is not going to be good for the crypto market. And we can see that is marrying up with a fall in what we are seeing in crypto. So in this video, I want to spend some time in the Bitcoin chart. I want to spend some time in the Phantom chart as well to give you guys an update on the TA there. But more importantly, we need to understand why this move isn't fully sustainable. A lot of people got really excited in this pump. And the mindset is fine to get excited in a pump, but to understand what is the larger trend. You guys know on this channel, I always zoom out. We can enjoy an hourly trend. We can enjoy a 4-hourly trend. But where do we sit on the daily? Where do we sit on the weekly, more importantly in this case, to say, okay, how long can we actually move to the upside? So we're going to do that here in this video. We're going to break it down. But I want you guys to understand that we're facing some difficulties right now, and they're not going to disappear overnight. Pre-market is down right now. I'm going to come on to why. Down another 0.76 after a bad day yesterday. 0.76 there on the NASDAQ. S&P down 0.68 and 0.67 for the Dow. So setting up for another red day here today. And we can see there's a bunch of issues still going on in the market. We know tech companies were laying off throughout 2022. Microsoft have come out and said they want to lay off another 10,000. We know Amazon are laying off. We know Facebook are laying off. So this is continuing to enter a crunch period. And we know from a macroeconomic perspective, people are still preparing for a recession. A lot of people are not expecting Jerome Powell to manage to pull off a soft landing. And even if he does, they're expecting a moderate to mild recession, right? So you're seeing that preparation happen. So for us to sit here and look at that pump and say, oh, we're just going to move into our next bull cycle, that's very immature and irrational, because that's not what we're seeing here. What we're seeing here is a relief rally, and we need to understand what it is for what it's worth. Now, that being said, there have been some macro shifts, which is why I'm saying that the pump is not just, eager leverage longs. There's a combination of that, but the pump was actually derived from a shift in the CPI data, in the non-farm payrolls, which we've been monitoring on this channel. And those figures are coming in line. We saw PPI again yesterday come in line, but guess what? It's a double-edged sword. And so we had the PPI reading come out yesterday, which was an amazing figure in terms of if you're looking at inflation coming down. But markets are not impressed. And markets digested that news going, hang on a second. It is coming down way faster than we expected. Now, why would this be a bad thing, guys? Remember Goldilocks? Remember we spoke about Goldilocks? They want it just right. They want inflation to come down. You do not want it plummeting down. If it's plummeting down in the respect that they think that Jerome Powell doesn't have control of it, then in other words, what they're almost believing is that Jerome Powell is nosediving towards a deep and painful recession. So they want inflation to come down in a controllable manner. Think of bringing a car to a stop on a motorway. You want to gradually get on that brake and slow it down. You don't want someone just hitting an emergency stop. You're going to go flying out the windscreen, right? i.e. recession. So that's why the markets are a little bit concerned. Now, obviously, yesterday we covered off how the markets are a little bit rigged. We had the issue with the Department of Justice. At the same time, obviously, Genesis getting ready for filing a bankruptcy. So that caused a little bit of downturn in the charts yesterday. But I wouldn't worry too much about that. I mean, you can see here, it was frustrating because from a trading perspective, and guys, if you want to trade with me, links in description, BYBIT, BitGet, those are two exchanges I'm currently using. If you guys want to trade, check the links in description. Some amazing bonuses there if you want to trade with me. Now, what you can see is we were heading towards the top of this channel, and the PPI came out and we had a really nice hourly candle there working towards the top of the channel. If we had braked here, I would have taken a really nice long, because remember, this is a bullish continuation pattern, which more likely than not breaks to the upside. Then you saw a huge collapse when the Department of Justice came out yesterday, and they just, between the two videos I posted, they put out a press release saying huge crypto enforcement going to be announced. And the market just lost it, right? Traders pooped their pants, they got out of their leverage longs, and they started shorting immediately, which is why you saw these huge wicks to the downside. Now, since you've seen a recovery, right? It's just been sideways there for the rest of the last 24 hours since then, because they came out and they're enforcing on some small exchange, some Hong Kong-based exchange with like 700 million in laundering or something like that, which nobody cares about. It's a nothing burger, right? So we can crack on. Now, Where are we seeing the support? Well, interestingly, you can see that the blue line is that line from the previous bull market high. So December 2017, you got to that 21,000 mark. This is this blue line here. We need to hold this level or thereabouts if we want to build to our next level up. Now, if I zoom out to another chart, I'm going to show you it from this perspective. And this is where we're sitting. Again, this is an hourly chart. But where are the horizontal resistances? Well, obviously, you've got the 20,000 level, right? So you've got 20,000 flat. Then after that, you've got the bottom of our channel, which is 18,700. Those are the two key levels I'm looking at from here. And either one of those I'll take. In terms of the longer term trend, if you pull out that EMA ribbon, I'll take any of those, right? You can see there on the hourly chart, it looks like, oh, we lose our hourly. But it really doesn't matter. If I zoom up to the 4 hourly, you can see here how much room we have. So even coming down to the 20,000, which is this green line here, we're just testing the bottom of our 4 hourly EMA ribbon. Even better, if I go to my daily EMA ribbon, you can see that's nothing. We're still well above our EMA ribbon if we come to 20,000. In fact, we can get down to 18,700, and then we start touching our daily EMA ribbon. So this is all perfectly fine. And the more we pull back here, the more I'll be tempted to dollar cost average into my long-term holds. For a short-term trade, it's also better to buy on here. Remember when we had this extended move to the upside? Loads of people are foaming up here. You're asking for trouble, right? Because an exponential move can only be exponential for so long. You need to come down and build scaffolding. Whether it wants to come down to 20 and build some scaffolding there, then think about how it wants to climb higher, or whether it wants to come to 18,700, either of those are absolutely fine. And I'll be waiting at those points to see where do I want to enter my next long. If you want to be alerted, make sure you're following me on Twitter, make sure you're in the Telegram, make sure you're in Discord. They're all free. But that's where I give you updates in between videos. The markets move quickly, guys. So if you want the latest updates, I'll just send screenshots of the charts and patterns and what I'm looking at and the indicators I'm looking at. So make sure you're in those different places. If you want to learn TA, ijaz.uk/TA. Take advantage of that course, guys. I put 10 years of my traditional finance and technical analysis experience there. EMA ribbons, head and shoulders pattern, ascending wedges, descending wedges, bull flags, bear flags, cup and handle patterns, Japanese candlestick, doji candles, you name it, all in there, chapter by chapter, work your way through it, keep it as an encyclopedia when you're trading to the side, and that way you're going to learn through this bear market, okay? So that's really important. Definitely check that out. Link is in the description. So that's what I'm looking out for here. A few other things we need to monitor. Let's take a quick look here at the Phantom charts. I know a bunch of you have been asking me for it. Phantom, again, we monitored the same W pattern, took our trade exactly to the top here. Beautiful trade all the way up to 34 cents. Now we're getting our correction down. Again, it's going to look to Bitcoin for a direction, right? But if you look at this daily chart, look at where we're at now. It's no coincidence that where we're trying to hold support is where we got rejected last time. So we got rejected around this 30 cents mark, and we need to hold that support here. Of course, it's going to depend on Bitcoin. If Bitcoin holds the level we're currently at, around that 20,500 mark, then great. Phantom will be able to bounce from here as well if Bitcoin bounces. If Bitcoin wants to come down to that 18,700, closer to its daily EMA ribbon, then best believe that Phantom's going to want to do the same, and that's going to bring it back to its neckline around that 25 cents mark is where I'll be looking, and another opportunity between 24 and 25 around this area for a pullback if Bitcoin wants to go for the deeper pullback. Now, it's going to depend on where are the bears sitting right now. How are the bears sitting? Are they ready to push the market to the downside? Because they are exhausted. They did get short squares on this big move to the upside, and they'll be feeling it. Now, the macro economy is shrugging off its excited move, right? So you can see in the traditional finance, the readiness we've just seen in the markets, that's based on the fact that they had a really good start to the year, right? And now they're just putting their brakes on and saying, whoa, we got some Fed officials speaking today. We got initial jobless claims coming out later on today. We got company earnings. I mean, we got Netflix after the close, Procter & Gamble as well. Lots going on, right? So I'm just going to call off because Jerome Powell's speaking in about 12 days from now. He's got to decide on what he's going to do. The market's expecting him to do 66% of the market is expecting him to do 25 basis points. The rest are expecting him to pause, and there's no room for error. So people are just taking a few chips off leading up to that. So we've had a nice run to the year. Perfectly normal to see a healthy pullback. This is the bull and bear cycles, and you'll get used to it. Buy in position of strengths. Don't chase the green candles. We do not have green candle disease in this community. Buy from a position of strength. Never FOMO. If you feel yourself FOMOing, just out of pure principle, even if the price goes higher, do not buy out of principle, because you may get it right once. You may get lucky twice, but it's not a sustainable and pragmatic way to trade. If you want to learn trading, ijaz.uk/TA, pick up the technical analysis first. Then make sure you're in our Telegram, make sure you're in our Discord, make sure you're in our communities. All completely free, guys, and we'll pick it up from there. Thanks for watching, guys. I'll see you in the next one.